In this video, I want to show you a method which can take advantage of a long-lived edge in the Forex markets. I'm going to give you a specific strategy and then talk about other ways which we can make money from it too. As an example, when I talk about an edge in a particular market, think of the S&P 500 stock index. We know that looking at past decades of data that it just generally goes up over time. So we could use that as part of our edge. We could develop a long only or a strategy where we only buy, and we could buy dips in that longer term uptrend. But we're not going to talk about the S&P 500, we're looking at Forex today. Specifically, we're going to look at pound-yen Forex pair, and we're going to be looking at the edge, which happens to be its trending behaviour. So I'm going to show you a couple of methods which we can use to take advantage of its trending behaviour. I try and make these videos as useful as possible, and whenever I give you strategies, I always back them up with data. And the particular strategy which I want to talk about today is actually one I've shared before. I actually shared it years ago. I first published a video about it back in November of 2020, and of the time of making this video today, that's nearly 4 years ago. The nice thing about revisiting an old video and an old strategy is that we get to see how it's performed in out-of-sample data. True out-of-sample data is data or price data which we didn't have when we originally developed and tested the strategy, and it means there's no way for us to cheat or curve fit to make the strategy look good. Curve fitting means that we might have a big chunk of data we use to develop the strategy, and that's what we call our in-sample data. We then test the strategy, and then we might tweak or make improvements to the strategy, which then gives us an improved looking backtest. But in doing this, yes, we do get a good looking backtest, but that rarely goes on to perform well into the future on our true out of sample data. And of course, that's when we're live trading, and that's when things mean the most. I'm going to explain the rules to this strategy, and then we're going to have a look at the results. And then after that, I'm going to go on and show you another strategy, which also takes advantage of the trending behaviour in pound yen. If you want to see how I found the original strategy and the exact process I used to develop it, please go back and watch the video which I uploaded back in November 2020. I will leave the link to that. And also, back then, I actually created a PDF which gave you all the rules for the strategy all written out. You can download that too. I expect I'll leave the links for that down below. This strategy doesn't use any indicators. All we're looking for are the highs and the lows of the day so far. As usual, I'm working on exchange time for Forex, which is Eastern Standard Time or New York time. And we're only entering and exiting trades in a specific time window, and that's between 4 AM and 3 PM. We're just buying or shorting breakouts of the highs and lows. We're going with the trend, so we're buying breakouts of the daily high and shorting breakouts of the daily low. I like to use a stop loss of 150 pips, and there is a profit target of 470 pips as well. But the profit target isn't essential, but it does over time have better results than no profit target whatsoever. And both that stop loss and that profit target can be hit at any time of the day, not just within that 11-hour trading window. For most of the time, this strategy is a stop and reverse strategy. The profit target is rarely hit and the stop loss does get hit, but not all that often. Most of the time, we're generally changing direction in the trend. So what that means is if we're currently long and we see that a breakout below the daily low is hit, what we do is we exit the long trade and then we enter a new short trade, and vice versa. So we spend a lot of time actually in the market. Let's go and have a look at some trades on the chart, and of course, let's have a look at the performance report. I have this strategy programmed into multi-charts. Multi-charts is the software which I use to develop strategies, test strategies, and then eventually automate the trading as well. The first chart we're looking at is using data from, I'll just show you, from the 1st of the 1st, 2021. Now, if you remember back to the original video which I made, we had data up until around November 2020. So what we're looking at in this chart is we're looking at how the strategy performed after I released the video, after I developed the strategy and talked about the strategy. We've got data up until today's date, which is at the time of recording, 14th of October 2024. So almost 4 years worth. I've included 4 pips of costs within this strategy as well. All the data which I've got plugged into multi-charts for this test is from Oanda. We can see that up here. So let's have a look at the performance report. That's what the equity curve looks like, and we can see that it's pretty nice. right up until recently, that is. We can see the equity highs were around about the end of 2023. So ever since January 2024, the performance has gone down, although perhaps it is on the way to recover again. It's definitely showing quite a bit of a drawdown in comparison to the rest of the 3-4 years worth of data on this chart, isn't it? Am I worried? Not too worried at the moment, and we'll talk about that a little bit more when I show you some more charts in just a moment. We look at the long trades only. That's what the long only looks like. And again, it looks like equity highs were around about the end of 2023 and then essentially fairly flat from then on. Short trades only, it's quite a bit different. That's quite a choppy equity curve, but it is still making money trading on the short side as well. If we look at the buy and the hold, all this is just showing a price chart. This is not showing any trades whatsoever. This is just looking at like a price chart. And it's actually very similar to our equity curve of actually trading long and short, isn't it? We can see that it is in a general uptrend. That's probably why our long sides of the trades did better. So you might ask yourself, what was the point in actually trading all that time when we could have just bought and held? Well, I'll answer that question a little bit later when we look at some more charts. Looking at the total trade analysis in that almost 4 years worth of data, we've had 866 trades, percent profitable 38%. It's a trend following strategy. They're very rarely more than 50% profitable, and the average trade is 6.5 pips. We can see we've got a largest losing trade there, of which is our stop loss value, 154,000 yen. It's 150,000 for the stop loss plus 4 pips worth of trading costs, which we've got in there, which equates to the extra 4,000. Let's look at the annual period analysis. And we can see, as our equity graph showed us, that we've got winning years all apart from 2024. So what we can take away from that is, from the time which I developed the strategy and posted the original video, we've had a good 3 years worth of making money, and just most recently the performance has wavered a little bit. But let's look on the next chart. This is exactly the same chart, exactly the same strategy, but we've just got more data. Now we're looking at data from January 2008 right the way through to the same date. This is our annual period analysis. You can see these recent years, which we already just seen. We can see that 2017 and 18 weren't very good, but the rest of the years were profitable. Looking at the equity curve, we can see we've got a fairly nice equity curve. And that recent drawdown, although it is quite large, we have had drawdowns and flattish periods. So this drawdown, although it does look severe, it looks less severe when we look at the big picture. That's why I'm not too worried about it at the moment. Looking at the long only trades, that looks pretty good. Again, is this because pound yen has just gone up over time? We'll look at that in a moment. And then that's the short only trading side of things. And you can see that it definitely is worth taking the short trades with this strategy. So let's look at the buy and hold. And this is the price chart, just the price chart from 2008 of pound yen. And where we mentioned before, looking at this latest period here, we thought, why not just buy and hold? Well, this is the reason we wouldn't just buy and hold from 2008. If we'd have bought and held from 2008, we would have lost money. We've had big down periods, big up periods, down periods. So compared to our trading strategy, this is much, much worse. This is why we have a trading strategy. Just remind you, that's the equity curve of our trading strategy, going long and short. And the next chart that I'd like to show you is, this is a chart from 2008 through to today, so same amount of data, but I've removed a trading time window and I've removed trading costs. So what this is doing for me essentially is just demonstrating the behaviour of the market. We're just buying breakouts of the current day's high, shorting the lows, just to see what this market is actually doing. And that's what the equity curve looks like. So in its rawest form, we can see that the trending behavior of pound yen is still holding up. We're still making brand new equity highs up until today. We can see that with the green dots that shows us new equity highs. I don't suggest you trade this version of the strategy because the average trade value is only 2.4 pips. That's far too low because at the time we've got some costs in there. This is a money losing strategy. But what this is demonstrating is just the behavior of the market. So I'm happy to say that the trending behavior of pound yen is still there. It is still apparent up until today. As a comparison to a market which doesn't have trending behavior, let me apply the exact same strategy to another market to show you what might happen. I'm going to use US dollar, Canadian dollar, because I know that that's not a trending market. And now we have the exact same strategy, the same time frame, same rules, everything, but I've just applied it to US dollar, Canadian dollar, and funny enough, it looks like it does actually trend quite well looking at over the last couple of weeks. But how does it look back to 2008? Well, that's what the equity curve looks like. If you'd have traded the exact same strategy, buying the daily highs, shorting the daily lows in US dollar, Canadian dollar. So immediately we can say that this is not how we'd want to trade this particular market. When looking to trade US dollar, Canadian dollar, we'd probably want to be using a reversal or mean reversion type approach rather than momentum or trend. The last chart I want to show you is another strategy which I personally trade, but this time it uses channel breakouts rather than looking at the daily highs and lows. We'll have a look at that in just a moment. But firstly, I just want to offer you an opportunity to get some more effective rule-based strategies, a little bit like we're looking at today. I've documented 3 more and I've put them in my 22-page Beat the Markets strategy guidebook. I list out exactly what markets to use and how to trade them. All the rules are in there. If that's of interest to you, then check out the description down below, because at the moment you can get that, or you can download that absolutely free. And if you'd like to learn more about how I trade mechanical or algorithmic trading strategies, then you can enroll in my trading course. Amongst all the other lessons, you'll find another 6 trading strategies in there too. Have a look for the link in the description down below where you can find more information about that. Now, let's go and have a look at this final strategy then. And this second strategy I want to show you is, again, a trend or momentum strategy for pound yen, and another one which I do personally trade. This time, instead of buying the daily highs and lows, this one looks at channel breakouts. We're looking at the highest high over an X amount of bars and the lowest low over X amount of bars, and we're buying and shorting breakouts above or below. This time it's on the 5-minute chart, and the report shows data back to 2008, and we're showing 4 pips worth of trading costs. So looking at the performance report, that's what the equity curve looks like. And notice that this time, let's have a look at the close to close, notice this time we haven't got that recent drawdown in performance like we did with the other strategy. This is making new equity highs right up until extremely recently. So it's nice to have these strategies combined in like a small portfolio of trend following strategies for pound yen. They complement each other pretty well. So that's just another way which we can trade trends or momentum, and that's using channel breakouts. So what can we learn from what I've shown you in this video so far? Well, firstly, I've given you a strategy which you can trade or not trade. That's up to you. But mainly we can see that for the past 16 years or more, that pound yen has shown a very trending behaviour. So we know how we should probably approach trading this particular market. We should look at it by buying into strength and selling into weakness. We'd probably find it very difficult to come up with a reversal strategy or a mean reversion strategy for the likes of pound yen with its trending behaviour. Those reversal strategies are probably best left to markets such as US dollar, Canadian dollar. We've seen the typical types of behavioural trait, and why try to fight that? It would be like trying to develop a short selling strategy for the S&P 500, which we know has a long-term uptrending bias. It can be done, but much easier to go with its bias or its edge. And for me, when I'm developing strategies, it's about stacking the odds in my favour. Well, that's about all for today's video. Thanks for staying to the end, and I really hope you've enjoyed it, but more importantly, I hope you've learned something from the video. I hope to see you next time when I next make a video, but until then, this is Jared Goodwin, and thank you.